Hello and welcome to day number 68 of our Travel Trader series, and today I want to talk to you about something that we call the Double Dip Recession. A recession in general is defined as 2 consecutive quarters of negative growth in the economy, and we measure that with the GDP or gross domestic product, which is all the goods and services that are produced in an economy. And if that is negative for 2 quarters in a row, that's when we officially talk about a recession. That's just how we define it. Now, when we talk about a double dip recession, we have a first recession, so 2 negative quarters, then we go up again, and then we dip down again into a recession. And in terms of economy, we think that these are very, very dangerous dips, because after an initial comeback, we now go back into a recession, and they are usually more severe than a normal recession. And we had these, for example, when we had the Great Depression in the 30s. That was something like a double dip recession. Now, if you have a look at the markets at the moment, and we have a look at some of the biggest countries economic-wise in the world, then we look at Japan and Germany, so number 3 and number 4, for example, and they kind of are in a recession, or they were in a recession and now they got out. Like Germany only got out of a recession because the revised numbers of the economy were slightly positive with plus 0.2%, and the last quarter was flat at 0%. Before that, we were negative, and the only reason why, let's say, we're not talking about a recession in Germany is because we revised some numbers, and obviously someone found some growth somewhere. Now, they didn't find any growth. We can think about that whatever way we want to. However, it's very likely that with the new coronavirus and the impacts in the economy, we will have troubles not only in Japan, which is affected a lot, but also in Germany and in Italy, which now had some drastic measurements over the weekend. I think they quarantined like 16 million people for getting rid of coronavirus spread in Italy. We can think differently about these things, but these are just the facts that we have to deal with in the economy. So one of the things that the coronavirus and the impact on the economy has is that it will come very, very quickly, rather than the usual recession, which is foreseeable very, very long term, or longer term at least, usually like 6 to 9 months in advance. Here we only had, let's say, a few weeks in advance, since the beginning of February, roughly until what is happening now. So we still have kind of sorry, I just got a funny comment on my live video. I don't know, but I heard that alcohol should get rid of coronavirus. So if you have some of that specific wine you're mentioning, then you will be on the safe side. If not, I guess you're in big trouble. So it's up to you. Anyway, we were at recessions, and if you run out of wine, it's a recession in its own, but it doesn't have necessarily a big impact on the economy. So back to coronavirus. So it will be a sharp decline, and the good thing about it, the good news actually, is that it is likely to go up dramatically very fast afterwards as well, especially if you have a look at the US, because the US right now is in a great shape economy-wise. We have lots of growth. They have the least unemployment rates for the last 50 years, so they could get in and out of that recession very, very quick. However, if you have a look at Japan, Germany, and Italy, they kind of will fall into that double dip, and as they have some underlying struggle, Japan, for example, with the aging population and a huge amount of debt that they are carrying around. I think it's around 240% of their GDP. that they are in debt. Germany very largely affected and very largely depending on the automotive industry, which is not in a good shape. We talked about that before, both in our videos as well as in my speeches that I was holding. We had numbers coming out from Continental recently, which were really, really bad, and the stock crashed down 10%. One of my trainers or many of my students, they were like having a big smile because we knew that in advance. Actually, I talked about it the day before these things happened, so everyone that was visiting my speech that day, I think it was Munich, could know that it was about to happen, could have made money out of it. And that's one of the German problems. We still have unresolved issues in the manufacturing industry in general, and the effect from China on the supply chain, as well as all the production companies, will be kind of dramatic. So we will see more and more of the numbers coming out, and we will see that their outlook is bad, and that will likely cause more effects on the already beaten up stock prices. However, I personally don't think that we have a huge issue in terms of we are expecting a huge major crash. One of the reasons is because the US is in great shape, and we already have a lot of central banks telling that if it really would come to one of these recessions or a double dip recession, we would be ready to flood the markets again with money, and some of the countries now have the ability to do so because we had kind of an economic growth in the past. So that would be possible, and that's why I think that latest when we reach around 20% drop from our last high, that's where we are going to stop, and then we will go up again. And one of the things that we can have a look at, because these markets are kind of correlated, and they well, not correlated but kind of negatively correlated, and we can deduct some information from them, is if you have a look at long-term bond interest rates. If we look at these, we can see that they are currently at a historical low. One of the reasons because we kind of flooded the market with it, but professional investors or institutional investors foremost, they get rid in terms of risk, or in times when risk seems to be high in the stock market, so they sell stocks and they put their money in something else, and that typically are these bonds. And that if you we will have a webinar or a video about it. I don't want to go too deep into the nitty-gritty of these things, but if many people are buying bonds, the price of the bonds go up. That means that the interest rates go down. That means we have very, very low interest rates at the moment, and that typically is a sign of weak growth and low inflation, or that's at least what we can expect over the next few months. So, to sum it up, double dip recession is a form where we go into a recession, slightly get out of it, and then immediately plummet into it, which is a nasty form of recession, usually very, very long. And now with the timing, the coronavirus, or the economic impacts of the coronavirus could bring us in such a double dip recession. But I still think there's no reason for extreme panic or to think it'll be another 90-30 or 2008-9 or even the year 2000, because given that we have that fast drop and probably really fast recovery again afterwards, I personally don't think that we will see a major crash. A correction of 20% would be all right, which would be something that I would really appreciate, because then I can start and buy more things at a discounted price, which would be good. And at the end of the year, I'm pretty sure that we are roughly about the same level, maybe just a little lower, but at a similar level where we have been before the corona crisis. So now going down, we will go up, and for us it doesn't really matter, because given with our indicators, we have the ability to earn money in all scenarios. So whether the market goes up, goes down, or sideways, we can always earn money. So for us, it's most important that the markets move from a global perspective, of course. We would love the economy to go up, be more productive, produce more, and enable a better life and living for everyone on this planet. So thank you very much for watching. If you have any questions on the economic forecast or outlook or my opinion on it, how these things work or the double dip recession, let me know in the comment section. Otherwise, I wish you a great Sunday with or without wine, depending on if you were able to stockpile something. As long as you don't run out of toilet paper, I think everything is very, very fine. So thank you very much for watching. I wish you a great Sunday evening and goodbye.